what role does ReNew want to play in India's energy plan?
Yeah, look, thank you so much for having me on your show. You know, ReNew today is India's largest renewable energy company. We generate almost 10% of the total renewables that is generated in the country as a whole, and almost 1% of India's total electricity generation. As you were saying earlier, I think India's energy demand is going to grow substantially, and a bulk of that new energy demand is going to be met from renewables. And as the preeminent renewable energy company in India, we certainly see ourselves playing a very significant role in this new demand growth that is going to happen in the country.
So having said that, what's the ideal mix of technologies as you look to meet the ambitious plan in India?
Well, you know, if we just look at the likely demand growth, our demand growth is actually going to double over the next 12 to 14 years, growing at about 5 to 6% every year. Now, the interesting thing is that while currently 2/3 of India's total electricity generation comes from coal-based sources, the reality is that in the next doubling, 2/3 of that is going to come from renewable energy sources. So we're actually sitting at a big inflection point right now. And this is primarily being driven, of course, by climate change and clean factors, but equally also by commercial factors. And today, both solar and wind energy are significantly cheaper now than coal-based power. And once we can deal with the intermittency issues through through cheaper storage solutions and so on, certainly wind and solar will become de facto the choice of anybody who wants to buy new energy. And so the reality, therefore, is that our growth in the country is going to be driven now from the renewable energy sector going forward. Now, it's going to be driven, I would say, primarily by solar, because solar is just much cheaper and is on a declining cost curve, and secondarily by wind. And the role that wind provides in the Indian context is a balancing load, because it also generates at night and not just in the daytime. What is also going to be very critical in this whole evolution is going to be the evolution of storage, batteries primarily, which, as we all know, are also on a declining cost curve. And I would be not very surprised if 3 to 4 years from now, the cost of solar plus wind plus storage, or just solar plus storage, will be significantly cheaper, almost 30 to 40% cheaper than coal-based power or any other form of baseload power. And so given the dynamics that is now developing,
right,
I would see very interesting growth for the renewable energy sector in the years to come.
Mr. Sinha, you talk about an evolution. India's been trying to reform its energy sector. Little has been achieved. Realistically, what reforms can we expect in 2021?
Look, I think the Indian government has already done a lot. First of all, you refer to the target of 450 gigawatts by 2030. That itself is a very, very significant target. Keep in mind that the current installed capacity is only 90 gigawatts. So in the next 10 years, we're talking about increasing that number by 5 times. And to put it in context, India's total power generating capacity from all sources today is only 370 gigawatts. So we're talking about adding the equivalent of India's entire power sector only out of renewables in the next 10 years. So I would say that's already a very revolutionary step that the government has taken in terms of setting that target. The second thing is that there are many things that have been done to make renewables much more grid-friendly and much more cost-efficient. And so I think all of those things are going to help as well. And the big part, although of the power sector that still needs to be reformed, and it's not renewable specific, but is overall a power sector issue, is the issue of the reforms of the distribution utilities in India. Now, unless that part of the value chain of the power sector is not fixed, that unfortunately passes stress back to everybody else in the value chain. And so that's one part of the sector that the government does need to reform. And we are hopeful that over the coming year or two, the government is already moving towards privatizing these distribution utilities. As that happens, I think that will then lead to a much faster and explosive growth in the power sector in the country.
Sumant, the problem is that some of these big states in India are actually opposing many of the clauses which you're just highlighting, including this privatization of power distribution businesses. Now, is that the biggest obstacle? Is politics a real issue for you?
You know, I would say it's not politics as much as it is the politico-economic system in the country. Power in India generally has always been controlled by the Indian state governments because, the distribution utilities are owned by the state governments of India. And different states have different views on how they want to reform that sector, whether they want to privatize it or not. And so therefore, we have multi-track sort of approaches on the distribution utility side, some states being a little bit more enlightened and moving forward in that direction, some not being so enlightened and using pricing of power as a political tool. So then that really is a problem. The central government, for its part, however, is very clear that the distribution utilities do need to be fixed. And they've come up with several ideas, one of which is just privatizing outright the distribution utilities. The second is separating the wire owning company from the content providing company. And the third is trying to just have some sort of franchisee operations happening in the distribution utilities. So the central government, unfortunately, does not have the ability of imposing its own solution on the states, because the states are the ones that control that area. But the center certainly is trying to work closely with the states to find the right solutions. And therefore, as I said, with all of this action going on and this recognition on the part of governments in India that this is an important issue that needs to be fixed, I'm fairly hopeful that over the next 3 to 4 years, we'll see some traction in that area. Now, also keep in mind that the central government does control certain utilities in certain small territories of India. And in those territories, it has clearly said that they are going to privatize those distribution utilities in those small territories of the country. So I think that will then serve as a benchmark for other states as well. And so therefore, as I said, the distribution utility issue is likely to get fixed over the next few years' time. But I think regardless of that, the reality is that power demand is something that is essential to the Indian economic growth. Everybody recognizes that. And therefore, willy-nilly, whether the utilities get fixed properly or not, I think you'll still see a tremendous growth on the generation side.
Sumant, of course, these ambitious targets are going to need a lot of capital expenditure. You probably do need money. You need to raise money. Now, what about renewing your IPO plans? There have been reports that you're looking perhaps to do that and perhaps even look for an international IPO. Can you comment?
No, so you're absolutely right. Look, the sector as a whole in the country is going to require almost $500 billion of investment. So there's a lot of room for raising capital and investing capital. And it's not just in the generation side. We'll need capital in the transmission sector, in the distribution utility sector, as we talked about. As far as our own IPO plans are concerned, it's something that we're certainly evaluating. And I think at the appropriate time, we will certainly look at going forward on that side. As you know, the capital markets are, of course, doing very well at this point in time. ESG investing as a theme is becoming bigger, and I think will continue to grow. And so I think the capital markets do offer us a good opportunity to raise capital at some point.
So, Sumant, that brings me, of course, with a Joe Biden presidency looming, one which is going to be seen as being much more akin or much more friendly towards the environment and indeed perhaps even joining the Paris Accord. Does that add even further pressure on you to actually get going and perhaps list as a result of that, because it's something which is a rising tide and lift all boats?
I wouldn't say pressure is the right word to use, Rish. I think it certainly makes it more attractive for us. Regardless of the Biden victory, the good news always has been that globally the movement towards climate change mitigation measures did not abate as a result of the U.S. administration's efforts over the last 4 years, and I think that was really good news for the for the globe as a whole. And so I think Biden's winning and the new administration coming in and joining the Paris Climate Accord will, I think, at the margin make a difference in that the ESG investments are likely to become a little bit more stronger. So I think it will certainly make it more attractive for us to consider tapping the international capital markets for sure.
Some reports are suggesting that perhaps you're in talks with GAIL to offload some of your assets. Could you shed some light on that? And why might you be shedding assets when perhaps your peers, your rivals, are accumulating?
I think, again, the terminology, I think, needs to be changed a little bit. I don't think shedding assets is the right way to look at it. I think if you look at globally, all renewable energy companies, including global majors like Ørsted at the European utilities, Iberdrola, Enel, EDPR, I think everybody follows a model of building assets and recycling them as cheaper capital becomes available for built assets. And so therefore, there is a model that is developed globally for all renewable energy companies to build assets, warehouse them, hold them on their balance sheet, And at some point, depending on portfolio requirements, depending on new opportunities, depending on capital needs and so on, are willing to look at then, selling some assets, partly or fully. So I think that's a general model that all renewable energy companies globally are following. And I think you'll see that happening in India as well. You have the model of InvITs. So for example, some of our other companies in India are looking at selling assets to InvITs. There is a recycling of assets happening to new financial investors that are coming in that don't want to take risk of developing new assets, but are happy to take exposure to assets that are already built out. So I think that's a very natural thing that you'll see happening. There will be some companies who will be able to build assets and hold them for some time, and then sell them to people who are willing to come in at that point in time with new and less and more risk-averse capital. So I think that's the way the industry as a whole will evolve. And look, if you just look at it, the renewable energy industry globally will require an investment of almost $1 to $1.2 trillion every year.
Sumant.
Now compare that to the oil and gas industry, which used to require about $500 to $700 billion of investment every year. So the capital needs in our sector are just going to be humongous. And you will have a lot of institutional investors coming in who will come in subsequent to asset build out. So I think this is a natural model that is going to evolve globally.